Morning traders, it's Peter Thompson, Senior Mentor of 1 Billion Signal, sponsored by Merit Forex. Interesting week we're having, guys, as everybody is waiting for the NFP report on Friday. This specific one is more important than ever because we are getting closer to the interest rate hikes, which we've been waiting for. Just the Federal Reserve, quick reminder, wants to see stable labor market in the United States and, of course, low inflation report. So NFP is on Friday, inflation report, CPI is next week. Two very important events before the next FOMC meeting. So US dollar started showing some signs of weakness again, even though you don't see it on the Euro US dollar chart in front of you here for the last couple of days. As you can see, it's a very indecision, but definitely USD, in my opinion, we will show even further down, will drop even further down. So that's why be careful by taking any short trades on the Euro US dollar. On Monday, we got the red numbers of the manufacturing production on Monday. Crude oil finally loses some ground. We're gonna take a look in about a minute. And don't forget about the Bank of England interest rates on Thursday. Important and insanely volatile event for the GBP. So let's take a look. What do we have from the charts? Euro US dollar in front of us. It's fluctuating, as we already mentioned, up and down. Nothing much is happening. People are waiting. Today is the ADP, non-farm employment change. Also important, not volatile as the Friday one, but this one could bring some volatility on the market. GBP US, pretty stable, absolutely okay, trying to recover, trying to rebound from this slight drop to the upside. 1.40 pretty possible. I would wait for the interest rate to see what's gonna happen. Most probably they're gonna keep the same interest rates on Thursday, but until then I would prefer to wait. Australia and US, something pretty interesting because it's finding some support on 0.7340. We got interest rate on Tuesday, yesterday, so that's why we've seen a slight push to the upside, like 60 pips. Nothing super big, but still it's a bullish pressure. So Australian dollar could be very good opportunity. Even now, definitely. I'm not gonna be surprised to see 0.75635, this resistance level. There is a lot of room to grow, so Australian could be nice trade. GBP USD, kind of similar, but I don't like it just because it's pretty close to the resistance level 0.71, so just 50 pips away from it. I wouldn't touch it in the upcoming days. I would just see what is planning to do. USD Canadian, very favorite currency pair. Just I'm going directly to the crude oil fast, something that we've been discussing for quite some time, and it's very clear right now. As you can see, lower highs we have. This drop was absolutely expected. $4.5 per barrel. I am taking very careful short trades on the crude oil. But just bear in mind that we can see further drop to the downside. The demand is not very high, especially right now, talking about the Delta COVID virus. It's something that could put a lot of pressure on the crude as well, because of course the traveling is gonna go down. So that's why crude oil could be very nice short opportunity. Be very careful if you plan to short crude oil, because this is for the professionals. So if we see continuation to the downside of the crude oil, we definitely can see slight push to the upside of the USD Canadian because of the weakness of the Canadian dollar. But since we know that the US dollar is getting very weak for a very long period of time, just take a look what we talked about. This is completely in a downtrend. I think the weakness of the US dollar will prevail on top of the strength of the weakness of the Canadian dollar. So simply, Yes, I do expect the USD Canadian to go down. 1.2532 is the current price. As you can see, in the middle of these boundaries, 1.2623 is our resistance, 24.66 is our support. So I'm not touching it right now, just waiting to see how the price is going to react until we touch either the support or the resistance. USD Swiss. This was pretty clear. Nothing much to discuss here. Tested the resistance, 170 pips. Whoever taken this short trade, super simple, super easy, quite obvious. You made very good returns on it. And a USD Japanese yen, the currency pair that we've been discussing, always simply because right now the situation is getting a little bit more clear, because as the US dollar was going down, the same time the USD Japan specifically, compared to the rest of the currency pairs, was going in an uptrend. So this is simply because USD Japanese, this uptrend I would say is created not because of the strength of the US dollar, more because of the weakness of the Japanese yen. So that's why many people are asking me, isn't that an uptrend? I wouldn't say so. Even if you zoom out a bit, you see there such a big corrections to the upside are pretty normal. So thank you very much for watching, guys. Really hope you enjoyed these videos. Of course, share us and like us on the social medias. This is how you support our channel. Thumbs up on the video. Expect my new video on Monday. Enjoy the week, have fun, and make money.